Hey, good morning everyone, and welcome to the PivotBoss pre-market report for Thursday, June 7th, 2018. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. The ES pulled back early in the session, in the previous session, and then turned around and continued higher into the close, closing near the highs of the session. Very strong continuation after price pushed above the previous month's high here. That's the 2741.75. Continues to hold a support overall, and this thing continues to squeeze. So very bullish start to the month here. The outer edge again that we're shooting for is at 2800 and as high as 2829 quarter. That is the FOMC key level from January 31st. We've yet to retest that level since its development here in 2018. So overall, this thing continues to squeeze higher. The farther we get away from the breakout point of 2741 means the higher likelihood that when price does return to 2741, it will be defended by bulls for a shot at continuing this thing higher. Doesn't have to return to that area, but the spacing that's been created between that area and where we currently are is good enough so that if price does pull back, any bulls defending the trend will look to engage at that zone. Again, that's your primary target area. That's about 28.15 to about 28.55, and overall we're looking mostly for a move into this recent high here and then again into the 28.29. That's the primary target zone as long as price can continue to hold 27.41.75. Alright, let's take a look now at the NQ. Here's a look at the NQ. This one has been very bullish as well, more so than the ES. I believe that we've just taken out a recent high. So we've taken out the high for the year, and now we have pretty much done exactly what we thought we could do last week. Last week I mentioned that this thing was gearing up for a potential stop run day. If it breaks through 7K and runs, we could have a 200-point move into 7,200 and a shot to see as much as 7,300. We talked about before that this was the best spot to look to trap, was above that high and return it back down. We also talked about this was the best spot to trap and return it back up. So again, what we've been talking about this time was let price go above this high here. Maybe it needs a week to trade, and then it could be a great fade back to 66.53. That is one potential option that I will be looking at here as we continue to play out over the next week. Now, if there's a more significant rejection, say price just comes up here and all of a sudden, there's an outside day down, then there could be again a retest opportunity that gets us back to 66.53. A way that this would not be super bearish would be for price to come back to 70.40, 70.47, bulls defend, and this thing just continues to drive, and then at that point we would switch to the extensions, the upside targets 50 and 100% above, and that's going to be the 74.40, and then the one beyond that is going to be 78.34. Those would be the major two upside targets to strive for if price continues to hold above 70.47. Alright, let's take a look now at crude oil. Here's a look at crude. This one here has dropped like a rock. It has had no effort really to the upside. The entire trend has been owned by the bears ever since this day right here when price gave out 70. However, you now see that price has formed a little box here below the previous month's low price and also below the 66 evens. 1, 2, 3, 4 days sideways. You'll also notice that right here, January 31st, that's the 64.38 FOMC key level. So far, that level has been defended each time it's been tested, and price is holding back above. So right now, the way it's developing, if price cannot establish another run below 64s, we may be looking at the early stages of development of a bear trap, and above 66 could spark a stop run to grab that midpoint that we were talking about before, which is still a valid midpoint. It may not create a new key range, but if you fail to hold below the previous month's low, you tend to rally back toward the previous month's mid with a shot to go all the way across the highs. So again, this level is 69.35, I believe. And so again, building the energy right now, and now we need to look for a catalyst that will get us into that target. All right, taking a look now at gold. Gold here continues to coil up, chopping back and forth really as this thing develops around an apex. So you're seeing a little up, little down, little back and forth. This is all forming off the 1310 level, which is that low right here, 1309. And again, we've been trending downward. Most of the energy has been released to the downside, so it wouldn't surprise me if that happens. Again, 1290 would likely be the level where that really gives way. Likewise to the upside, that 1310, 1309, right? Getting back above that zone, building out this energy, and then breaking above that zone, I think could spark the move back up now. So I think we're at a point right now where it is compressed significantly. It's hard to really decipher the next directional move because a compression of volatility doesn't say anything about direction, but we do have the 1309 level to really give us a clear idea of what might happen next. If there's any failure here, we could be headed right down. But any push through that zone, a significant push, could spark the next wave that eventually takes us to between 1360 and 1370. So that's what I'll be looking at here in gold as we continue forward. Alright, that is it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.